Hey traders, today we will focus on teaching scalping on the 5-minute time frame. This strategy doesn't require a daily bias and only utilizes the 1-hour time frame to identify the suitable fair value gap area. Here you can see the topics that we will explain in detail step by step. If this video was helpful for you, please like and subscribe. The first step is identifying a fair value gap area within the 1-hour time frame. The reason we choose this area is that there is a possibility that when the price returns to this fair value gap, it may cause price reversal and return to its bullish trend. Are all fair value gaps appropriate for this type of entry? The answer is no. We have two key components for identifying a fair value gap in the 1-hour time frame as a suitable area. The first is that this fair value gap should exhibit a noticeable imbalance, meaning the price has experienced significant growth or decline, causing some transactions not to occur in that area. This makes it more likely for the price to return to that area. Therefore, we never choose a small fair value gap as a suitable area. The second condition involves the formation of a break of structural following a fair value gap. This occurs when prices break through previous highs or lows as a result of the fair value gap formation. It is important to remember not to reverse this process. In other words, if a fair value gap forms after a break of structural, it should no longer be considered a significant area for us. Now that both conditions are met, we need to wait for the price to reach the fair value gap area, and then enter the 5-minute time frame. The fair value gap area and the price reaching that area again on the 5-minute chart are also completely visible. Now, we move on to the second step, where we need to see if there is any confirmation for entering the trade or not. Let's zoom in on the chart. The confirmation required to enter a trade is the formation of a change of character in the 5-minute time frame. This ensures that the price has indeed shifted direction by reaching a fair value gap in the 1-hour time frame. Now, the third step is determining the entry point. After the change of character, if a fair value gap forms, it is considered the entry area. The stop loss is placed before the first candle of the fair value gap, and the take profit is set at the first resistance area on the 1-hour time frame. As mentioned previously, the resistance area is considered as the take profit on the 1-hour time frame. We return to the 1-hour time frame to see the outcome of our trade. You see, this trade had a risk-to-reward ratio of 1:4, and we closed it as soon as the price reached the resistance area. Moving forward, we'll address some important points with examples and try to prevent potential mistakes. We can see a bullish movement in the 1-hour time frame. Should we enter a trade when the price returns to the fair value gap area? We shouldn't enter a trade based on this chart for two reasons. The first reason, which is entirely evident, is that the fair value gap that would lead to the formation of a break of structure does not exhibit a noticeable imbalance. This reason alone prevents us from entering into a trade. However, this chart also has another significant flaw, which requires us to look back a little further to understand. When we examine closely, we observe that the price reversal was triggered by reaching a supply zone in the 1-hour time frame, rather than being a result of price correction. Upon reaching this supply zone, even if a fair value gap forms with a noticeable imbalance, there won't be a suitable entry area anymore. We have another chart in the 1-hour time frame. Both conditions on this chart are confirmed: a fair value gap with noticeable imbalance that resulted in a break of structure. Now, in your opinion, if we enter the trade in the 5-minute time frame, which direction do you think the price will move towards? We need to look at the reason for the failure of this trade within the 5-minute time frame. The reason is the absence of the necessary condition for entering the trade within the 5-minute time frame. That is, no change of character has occurred in this time frame to prompt our entry into the trade. Therefore, we should not have placed any orders in this area that could lead to losses later on. Key final point is that if all confirmations are present within the 1 hour and 5-minute time frame, within the 5-minute time frame, we can enter into a trade by forming any fair value gap. This means we can create multiple buying or selling transactions until the price reaches our take profit. Don't forget to like and subscribe to watch our future videos.